Let's get ready for the Hawaii real estate exam with 100 questions covering the state-specific laws, principles, and practices you'll need to know. And don't miss what's happening in the bottom corner. It could be key to your exam prep. We'll tell you how in a minute. Now let's get started.
Let's get started with a review of Hawaii real estate law and practice. Fair housing laws in Hawaii. Under the Hawaii Fair Housing Law, which of the following is considered a protected class? Is it A, pets, B, race, C, smoking preference, or D, social status? The answer is B, race. Hawaii's fair housing law aligns with federal laws, protecting classes like race, color, religion, sex, familial status, handicap, and national origin. Understanding these classes is crucial for compliance. Which office administers and enforces Hawaii's fair housing laws? Is it A, Hawaii Department of Finance, B, Hawaii Housing Authority, C, Hawaii Civil Rights Commission, or D, Hawaii Board of Realtors? The answer is C, Hawaii Civil Rights Commission. The Hawaii Civil Rights Commission ensures compliance with fair housing laws by investigating complaints and providing education, reflecting both state and federal guidelines.
Have you noticed the code in the bottom corner? Next time you're stumped, take that code to birdsey.ai for immediate help and a free study session with Birdsey, your personal AI study partner. Plus, you'll get access to hundreds of additional questions, helping you move closer to passing your exam with confidence. The next time you're feeling unsure or stuck, give it a try.
Which of the following actions is prohibited under Hawaii fair housing laws? Is it A, refusing to rent a property based on family income, B, imposing higher security deposits for tenants with children, C, declining an offer due to a tenant's poor credit history, or D, offering discounts to veterans? The answer is B, imposing higher security deposits for tenants with children. The Fair Housing Act prohibits discrimination in housing due to familial status. Any policies or actions affecting families with children need to comply with these regulations. Which of the following is a typical exemption to fair housing laws in Hawaii? Is it A, owner-occupied buildings with no more than 4 units, B, newly constructed high-rise apartments, C, commercial properties, or D, vacant land? The answer is A, owner-occupied buildings with no more than 4 units. The Fair Housing Act provides exemptions for certain properties like small owner-occupied buildings, recognizing situations where full compliance may be burdensome. In Hawaii, what is the primary purpose of reasonable accommodation under fair housing laws? Is it A, to ensure tenants receive financial aid, B, to allow modifications to accommodate disabilities, C, to provide language translation services, or D, to maintain building safety codes? The answer is B, to allow modifications to accommodate disabilities. Reasonable accommodations under fair housing laws ensure individuals with disabilities have equal opportunity to use and enjoy their housing by modifying rules, policies, practices, or services. Which of the following is not a protected class under Hawaii's fair housing laws? Is it A, age, B, race, C, sexual orientation, or D, religion? The answer is A, age. In Hawaii, age is not considered a protected class under the state's fair housing laws, unlike race, sexual orientation, or religion, which are explicitly protected. What entity handles fair housing complaints in Hawaii? Is it A, Hawaii Civil Rights Commission, B, Department of Commerce and Consumer Affairs, C, Hawaii State Bar Association, or D, Hawaii Association of Realtors? The answer is A, Hawaii Civil Rights Commission. The Hawaii Civil Rights Commission is responsible for processing and investigating fair housing complaints under state law. real estate contracts in Hawaii. Which of the following elements is essential for a valid real estate contract in Hawaii? Is it A, purchase price, B, seller's personal information, C, property appraisal, or D, closing date signature? The answer is A, purchase price. In Hawaii, a valid real estate contract must include the purchase price, parties' consent, legal description, and other key elements that form the basis of a legally enforceable agreement according to state law. What is the minimum age requirement for legally entering into a real estate contract in Hawaii? Is it A, 16 years old, B, 18 years old, C, 19 years old, or D, 21 years old? The answer is B, 18 years old. Hawaii law stipulates that parties must be at least 18 years old, the age of majority, to enter into binding real estate contracts, ensuring they have the legal capacity to engage in such transactions. Which party typically prepares the initial draft of a real estate purchase contract in Hawaii? Is it A, seller, B, buyer, C, real estate attorney, or D, escrow company? The answer is B, buyer. In a typical Hawaiian real estate transaction, the buyer or their agent drafts the initial purchase contract as an offer containing terms and conditions for the seller's consideration. In Hawaii, which clause in a real estate contract allows the buyer to void the agreement under certain conditions? Is it A, escalation clause, B, contingency clause, C, acceleration clause, or D, warranty clause? The answer is B, contingency clause. Contingency clauses in Hawaii real estate contracts offer buyers protection, allowing them to withdraw from the contract if specified conditions, such as financing or inspection approvals, are unmet. Which document officially transfers ownership of property according to real estate contract terms in Hawaii? Is it A, deed, B, title insurance, C, mortgage note, or D, lease? The answer is A, deed. In Hawaii, property ownership transfers via a deed following the agreement outlined in the real estate contract. The deed must be executed, delivered, and recorded to become effective. In the Hawaii real estate market, what must a contract include to be considered enforceable? Is it A, signature of a witness, B, mutual consent of all parties, C, notarization of the document, or D, listing realtor's approval? The answer is B, mutual consent of all parties. A valid real estate contract in Hawaii requires mutual consent of all parties involved. This agreement forms the foundation for the creation and enforceability of the contract. Which financing contingency clause might be included in a Hawaii real estate sales contract? Is it A, inspection waiver clause, B, loan approval contingency, C, common area usage, or D, property tax assessment? The answer is B, loan approval contingency. A loan approval contingency in Hawaii allows buyers to void the contract if they cannot secure financing. It ensures buyers aren't forced to purchase without the funds required.
If you're finding this helpful, please take a minute to like this video and subscribe to our channel for more practice exams, useful tips, and complimentary study sessions with Birdsey.
Disclosures required by Hawaii law. What must a seller disclose to a buyer according to Hawaii law? Is it A, details of the property's proximity to schools, B, material facts affecting the property's value, C, recent renovations made to the property, or D, all previous owners of the property? The answer is B, material facts affecting the property's value. Hawaii law requires that sellers disclose material facts that affect the value of the property and aren't obvious to the buyer. This ensures that buyers have full knowledge when completing a transaction. Under Hawaii law, Which of the following must be disclosed regarding a property's environmental hazards? Is it A, presence of termites, B, lead-based paint in homes built before 1978, C, radon gas levels, or D, general property inspection reports? The answer is B, lead-based paint in homes built before 1978. Hawaii follows federal requirements for disclosing potential lead-based paint hazards in homes built before 1978 to protect the buyer from health risks associated with lead exposure. What is the primary purpose of the seller's disclosure statement in Hawaii real estate transactions? Is it A, to increase the market value of the property, B, to inform the buyer about the property's condition, C, to outline the financing terms available, or D, to reduce the negotiation time between buyer and seller? The answer is B, to inform the buyer about the property's condition. The seller's disclosure statement in Hawaii is meant to provide thorough information about the property's condition, ensuring transparency in the transaction and protecting the buyer from unknown defects. Which of the following statements about Hawaii's requirement for disclosing neighborhood nuisances is correct? Is it A, no neighborhood nuisances must be disclosed by law, B, nuisances such as barking dogs need not be disclosed, C, nuisances are only disclosed if they have caused complaints, or D, disclosure of nuisances is optional based on seller discretion? The answer is A, no neighborhood nuisances must be disclosed by law. Hawaii law mandates the disclosure of known neighborhood nuisances that could affect the property's value or living experience, ensuring potential buyers make informed decisions. Which of the following is not required in a Hawaii property disclosure statement? Is it A, structural issues, B, historical significance of the property, C, water damage or mold, or D, zoning violations? The answer is B, historical significance of the property. In Hawaii, property disclosure requirements include structural issues, water damage, and zoning violations, among others. However, historical significance is not typically required unless it directly affects property value or usage. What are Hawaii real estate sellers required to disclose about the property to prospective buyers? Is it A, planned improvements on neighboring properties, B, existing zoning violations, C, average utility costs over the past year, or D, detailed history of all past owners? The answer is B, existing zoning violations. Hawaii law mandates disclosing material facts affecting the value or desirability of a property, including zoning violations. This ensures buyers are informed of potential legal risks. Under Hawaii law, when must the seller's disclosure statement be provided to the buyer? Is it A, at the first open house, B, within 10 days of contract acceptance, C, before or at the signing of a real estate purchase contract, or D, after the closing date? The answer is C, before or at the signing of a real estate purchase contract. Hawaii legislation requires sellers to deliver the disclosure statement before or at contract signing, providing the buyer essential property information for an informed decision.
Notice the code in the corner? When you're stumped by a question, enter it at birdsey.ai for immediate help. Enjoy complimentary study sessions and access to hundreds of additional questions to help you pass your exam with confidence.
Transfer of title in Hawaii. Which document is most commonly used to transfer property title in Hawaii? Is it A, warranty deed, B, quitclaim deed, C, grant deed, or D, sheriff's deed? The answer is A, warranty deed. In Hawaii, a warranty deed is typically used to transfer property titles. It guarantees that the seller holds clear title to the property and has the right to transfer it. What is a significant advantage of the land court system in Hawaii in terms of title transfer? Is it A, deeds are automatically approved, B, provides conclusive evidence of ownership, C, no legal fees required, or D, allows quick transfer of title? The answer is B, provides conclusive evidence of ownership. The Hawaii Land Court system provides a certificate of title that acts as conclusive evidence of ownership, assuring buyers of a clear title without the need for further verification. In Hawaii, which governmental body oversees title registration under the Land Court system? Is it A, Department of Land and Natural Resources, B, Bureau of Conveyances, C, Hawaii Real Estate Commission, or D, Title Registration's Office? The answer is B, Bureau of Conveyances. The Bureau of Conveyances is responsible for handling real estate documentation in Hawaii, including the registration of titles under the Land Court system and transferring title according to state laws. What type of title ownership is most common in the state of Hawaii? Is it A, joint tenancy, B, tenancy in common, C, tenancy by the entirety, or D, community property? The answer is B, tenancy in common. Tenancy in common is the most common form of property ownership in Hawaii, allowing two or more parties to own the property together with different ownership interests, unlike joint tenancy. Which document formalizes the transfer of ownership from the decedent to an heir in Hawaiian property law? Is it A, probate court order, B, living trust, C, life estate deed, or D, executor's deed? The answer is A, probate court order. A probate court order is essential in Hawaii to transfer title after someone dies, ensuring legal verification and distribution of the decedent's property to heirs as recognized by the probate court. What is the primary method used for title conveyance in Hawaii's regular system? Is it A, warranty deed, B, quitclaim deed, C, grant deed, or D, land lease? The answer is A, warranty deed. In Hawaii, the warranty deed is the primary method for conveying title in the regular system, as it guarantees clear title and ownership transfer. This ensures that buyers receive a clean title from the seller. Who confirms the transfer of title in Hawaii's land court system? Is it A, county clerk, B, registrar of the land court, C, real estate commission, or D, Hawaii Association of Realtors? The answer is B, registrar of the land court. Hawaii's land court system involves the registrar of the land court who confirms title transfers, providing a guarantee of legal ownership to the buyer. This ensures transparent and assured ownership transfer. Earnest money and escrow in Hawaii. In Hawaii, what is the typical fate of earnest money if a real estate transaction fails due to the buyer's contingency not being met? Is it A, the seller retains the earnest money, B, the real estate agent receives the earnest money, C, the earnest money is returned to the buyer, or D, the earnest money is divided equally between the buyer and the seller? The answer is C, the earnest money is returned to the buyer. In Hawaii, earnest money is usually returned to the buyer if a sale does not go through due to unmet contingencies. This reflects standard practices outlined in purchase agreements. What is the primary purpose of earnest money in a real estate transaction in Hawaii? Is it A, to cover the cost of escrow services, B, to serve as a deposit showing the buyer's serious intent, C, to pay for the home inspection, or D, to reduce the final sale price of the property? The answer is B, to serve as a deposit showing the buyer's serious intent. Earnest money is a deposit made by the buyer to show good faith in the transaction. It is credited towards the purchase and serves as security for the seller. Which entity typically holds the earnest money during a real estate transaction in Hawaii? Is it A, the seller's attorney, B, the buyer's real estate agent, C, a neutral escrow company, or D, the local real estate licensing authority? The answer is C, a neutral escrow company. In Hawaii, earnest money is usually held by a neutral third-party escrow company, ensuring that it is dispersed properly according to the transaction agreement. What happens to earnest money if both the buyer and seller mutually agree to cancel the purchase contract in Hawaii? Is it A, it is automatically forfeited to the seller, B, it is returned to the buyer, C, it is retained by the escrow company as a fee, or D, it is split between buyer and seller? The answer is B, it is returned to the buyer. When both parties mutually agree to terminate a contract, the earnest money is typically returned to the buyer, reflecting a joint decision outside default circumstances. Who is responsible for providing documentation to release earnest money from escrow in Hawaii? Is it A, the buyer only, B, the seller only, C, both buyer and seller, or D, the escrow agent only? The answer is C, both buyer and seller. In Hawaii, releasing earnest money from escrow requires documentation or agreement from both the buyer and seller to ensure proper disbursement according to the transaction terms. What is the statutory period for returning earnest money if a real estate transaction in Hawaii falls through? Is it A, B, 30 days, C, 15 days, or D, 60 days? The answer is C, 15 days. In Hawaii, upon cancellation of a real estate contract, earnest money must be returned within 15 days. This ensures timely resolution and compliance with state regulations. Under Hawaii law, when can the seller keep the earnest money as damages? Is it A, if the buyer backs out due to a valid contingency, B, if the buyer breaches the contract without cause, C, if the closing is delayed by the escrow company, or D, if the buyer requests a minor contract amendment? The answer is B, if the buyer breaches the contract without cause. Earnest money acts as a form of liquidated damages in real estate transactions. In Hawaii, if a buyer breaches the contract unjustifiably, the seller is entitled to retain the earnest money. Hawaii real estate taxes. What is the general excise tax rate for real estate transactions in Hawaii? Is it A, 4%, B, 3.25%, C, 2.5%, or D, 5%? The answer is A, 4%. Hawaii's general excise tax rate for most transactions, including real estate, is 4%. This tax is applied to the gross income of businesses and affects transaction costs. Which of the following is true about the conveyance tax in Hawaii? Is it A, it is a flat rate regardless of property value, B, it applies only to commercial properties, C, it is a progressive tax that increases with property value, or D, it is paid by the buyer? The answer is C, it is a progressive tax that increases with property value. Hawaii's conveyance tax is structured progressively, meaning the rate increases with the property's value. It is generally paid by the seller, reflecting the sales volume. Who is typically responsible for paying the property tax on real estate in Hawaii? Is it A, the seller throughout the tax year, B, the buyer from the date of sale onward, C, the real estate agent managing the transaction, or D, the local government for the tax year? The answer is B, the buyer from the date of sale onward. In Hawaii, property tax obligations typically transfer to the buyer on the date of sale. Taxes are prorated between the buyer and seller based on this transition. How often are property taxes due in Hawaii? Is it A, annually, B, semi-annually, C. Quarterly, or D. Monthly? The answer is B. Semi-annually. Property taxes in Hawaii are due semi-annually, typically in 2 installments per year, helping to spread the tax burden over time. What determines the rate of property tax in Hawaii? Is it A. the buyer's income level, B. the property's assessed value, C. the property's purchase price, or D. the property's square footage? The answer is B. the property's assessed value. In Hawaii, property tax rates are based on the assessed value of the property, which reflects market conditions and valuation criteria set by local authorities. What is the purpose of Hawaii's Real Property Tax Relief Program? Is it A. to reduce property taxes on luxury homes, B. to assist qualified homeowners in reducing their property tax burden, C. to provide tax exemptions for commercial properties, or D. to eliminate property taxes during retirement? The answer is B. to assist qualified homeowners in reducing their property tax burden. Hawaii's Real Property Tax Relief Program provides assistance to homeowners, typically based on income and age criteria, to help them manage property taxes. This program aims to alleviate financial burdens associated with homeownership for those qualifying. What factor primarily influences the assessed value of a property in Hawaii? Is it A. the color of the property exterior, B. recent sales prices of comparable properties, C. number of bedrooms in the property, or D. the age of the property owner? The answer is B. recent sales prices of comparable properties. Assessed value in Hawaii largely relies on the sales comparison approach, evaluating the sale prices of similar properties to establish market value for taxation purposes. Hawaii real estate licensing and regulation. What is the primary purpose of Hawaii's real estate licensing laws? Is it A. to increase state revenue, B. to protect consumers by ensuring competent service, C. to limit the number of real estate agents, or D. to reduce competition? The answer is B. to protect consumers by ensuring competent service. Hawaii's real estate licensing laws are designed to protect consumers by ensuring that those who practice as real estate professionals are qualified and adhere to professional standards. Who administers real estate licenses in Hawaii? Is it A. Hawaii Association of Realtors, B. Hawaii Department of Commerce and Consumer Affairs, C. Honolulu City Council, or D. Hawaii Real Estate Appraisers Board? The answer is B. Hawaii Department of Commerce and Consumer Affairs. In Hawaii, the Department of Commerce and Consumer Affairs, specifically the Real Estate Commission, is responsible for administering and enforcing real estate licenses. How often must a Hawaii real estate licensee renew their license? Is it A. annually, B. every 2 years, C. every 3 years, or D. every 5 years? The answer is B. every 2 years. Hawaii real estate licenses need to be renewed every 2 years. Licensees are required to meet all renewal requirements, including continuing education and fee payments, to maintain active status. Which of the following is a requirement for obtaining a real estate salesperson license in Hawaii? Is it A. 2 years of college education, B. completion of a pre-licensing course, C. ownership of real estate property, or D. a business management degree? The answer is B. completion of a pre-licensing course. Prospective real estate salespersons in Hawaii must successfully complete a state-approved pre-licensing course. This ensures that candidates possess the foundational knowledge required for real estate practice. What is one of the continuing education requirements for Hawaii real estate license renewal? Is it A. 15 hours every 4 years, B. 10 hours annually, C. 20 hours every 2 years, or D. none required? The answer is C, 20 hours every 2 years. Licensees in Hawaii are required to complete 20 hours of approved continuing education every 2 years to remain knowledgeable about changes in real estate law and practice and to renew their licenses. What is the minimum age requirement for obtaining a real estate salesperson license in Hawaii? Is it A, 16 years old, B, 18 years old, C, 21 years old, or D, 25 years old? The answer is B, 18 years old. In Hawaii, the minimum age to apply for a real estate salesperson license is 18. This requirement ensures individuals have reached a maturity level to handle real estate transactions professionally. What is the passing score required for the Hawaii real estate salesperson examination? Is it A, 60%, B, 70%, C, 75%, or D, 80%? The answer is C, 75%. The passing score for the Hawaii real estate salesperson examination is 75%, ensuring candidates possess adequate knowledge of real estate laws and practices in the state.
Don't forget to comment below with your tips, challenges, and thoughts on exam preparation. Your experiences can make a big difference for others.
Hawaii Real Estate Commission under DCCA. What is the primary function of the Hawaii Real Estate Commission under the DCCA? Is it A, to provide financing for real estate purchases, B, to issue and renew real estate licenses, C, to manage Hawaii's real estate inventory, or D, to approve construction permits? The answer is B, to issue and renew real estate licenses. The Hawaii Real Estate Commission is responsible for regulating real estate licenses, ensuring compliance with state laws, and maintaining the integrity of the industry. Who appoints the members of the Hawaii Real Estate Commission? Is it A, Hawaii State Legislature, B, Hawaii Governor, C, Hawaii Real Estate Board, or D, Hawaii Real Estate Department? The answer is B, Hawaii Governor. The Governor of Hawaii appoints the Commission members to ensure they represent the interests of both the public and the real estate industry. What is the key responsibility of the Hawaii Real Estate Commission related to consumer protection? Is it A, setting real estate prices, B, investigating complaints against real estate licensees, C, endorsing specific real estate agencies, or D, providing legal advice to real estate agents? The answer is B, investigating complaints against real estate licensees. The Commission ensures consumer protection by investigating complaints against licensees, thus maintaining the public's trust in the real estate industry. How often must a Hawaii real estate salesperson renew their license? Is it A, every year, B, every 2 years, C, every 3 years, or D, every 5 years? The answer is B, every 2 years. Hawaii requires real estate salespersons to renew their licenses biennially, aligning with the Commission's mandate to ensure consistent professional standards. Which of the following activities is within the jurisdiction of the Hawaii Real Estate Commission? Is it A, drafting real estate contracts, B, monitoring continuing education compliance, C, arbitrating real estate disputes, or D, approving architectural designs? The answer is B, monitoring continuing education compliance. The Commission tracks compliance with continuing education to ensure that licensees maintain and update their knowledge, promoting professional competence. Let's continue with a review of Hawaii real estate finance. Loan fundamentals. What is the primary purpose of a promissory note in a real estate transaction? Is it A, to serve as a legal description of the property, B, to outline the borrower's promise to repay the loan, C, to transfer ownership of the property to the lender, Or D, to provide insurance for the loan? The answer is B, to outline the borrower's promise to repay the loan. A promissory note is a critical document in financing specifying the borrower's obligation to pay back the loan. It includes principal amount, interest rate, and repayment schedule, and is crucial for enforcing loan agreements in Hawaii. In Hawaii, what distinguishes a mortgage from a deed of trust? Is it A, a mortgage involves 3 parties, whereas a deed of trust involves 2? B, a mortgage directly transfers legal title to the lender upon signing? C, a mortgage is a 2-party agreement, while a deed of trust involves a 3rd-party trustee? Or D, a deed of trust does not allow for foreclosure in Hawaii? The answer is C. A mortgage is a 2-party agreement, while a deed of trust involves a 3rd-party trustee. The distinction between a mortgage and a deed of trust in Hawaii lies in the parties involved. A mortgage is between borrower and lender, while a deed of trust includes a trustee holding the title for security purposes. What is the definition of usury in the context of Hawaii real estate finance? Is it A, charging an interest rate below the market standard? B, charging a legally excessive interest rate on a loan? C, providing loans without collateral? Or D, borrowing from multiple lenders simultaneously? The answer is B, charging a legally excessive interest rate on a loan. Usury laws in Hawaii are designed to prevent lenders from charging excessively high interest rates, thereby protecting consumers from predatory lending practices and ensuring fair marketplace transactions. How does a recourse loan differ from a non-recourse loan in Hawaii? Is it A, a recourse loan allows the lender to pursue additional assets if the property doesn't cover the debt? B, a non-recourse loan requires higher down payments? C, a recourse loan limits lender recovery to the loan collateral? Or D, a non-recourse loan allows for higher interest rates? The answer is A, a recourse loan allows the lender to pursue additional assets if the property doesn't cover the debt. Hawaii real estate finance allows recourse loans, where lenders target the borrower's other assets post-collateral sale, contrasting with non-recourse loans, where recovery is limited to property collateral. In Hawaii, what role does a credit report play in real estate financing? Is it A, it only verifies the applicant's employment history? B, it determines the applicant's borrowing capacity and risk assessment? C, it appraises the value of the property being mortgaged? Or D, it is used to calculate the loan's interest rate? The answer is B, it determines the applicant's borrowing capacity and risk assessment. Credit reports in Hawaii real estate finance are essential for evaluating borrower creditworthiness, guiding lenders on risk and potential default, and impacting terms like interest rates and loan approval decisions. What is the main purpose of an amortization schedule in real estate finance? Is it A, to outline payment amounts over time? B, to determine interest rates? C, to calculate property taxes? Or D, to estimate closing costs? The answer is A, to outline payment amounts over time. An amortization schedule is a detailed table of all periodic loan payments showing the amount of principal and interest that comprise each payment. This helps borrowers understand how their loan balance declines over time. Which Hawaii law regulates the maximum interest rate lenders can charge on loans? Is it A, Hawaii Usury Act? B, Hawaii Residential Landlord-Tenant Code? C, Hawaii Housing Finance Act? Or D, Hawaii Fair Lending Regulation? The answer is A, Hawaii Act. The Hawaii Usury Act sets limits on the interest rates lenders can charge, ensuring that borrowers are protected from exorbitant lending rates and providing a legal framework for loan agreements. Loan type. Which type of loan is typically insured by the Federal Housing Administration and allows for a lower down payment? Is it A, conventional loan, B, Federal Housing Administration, FHA loan, C, U.S. Department of Veterans Affairs, VA loan, or D, jumbo loan? The answer is B, Federal Housing Administration, FHA loan. FHA loans are insured by the Federal Housing Administration and are popular for their lower down payment requirements. They make homeownership accessible to a broader range of buyers, including those with less optimal credit. What is a characteristic of a VA loan? Is it A, requires private mortgage insurance, B, available to all buyers, C, offers a no down payment option, or D, usually has higher interest rates? The answer is C, offers a no down payment option. VA loans, backed by the Department of Veterans Affairs, offer eligible military personnel an option for no down payment, eliminating the need for private mortgage insurance and often providing lower interest rates. Which type of loan does not conform to the loan limits set by Fannie Mae and Freddie Mac? Is it A, Federal Housing Administration, FHA loan, B, conventional loan, C, U.S. Department of Veterans Affairs, VA loan, or D, jumbo loan? The answer is D, jumbo loan. Jumbo loans exceed conforming loan limits, making them unique. They require stricter lending standards and typically come with higher interest rates because they aren't bought by Fannie Mae or Freddie Mac. Which loan type is best described as one where the interest rate is fixed for the entire term? Is it A, adjustable rate mortgage, B, conventional fixed rate mortgage, C, Federal Housing Administration, FHA loan, or D, balloon mortgage? The answer is B, conventional fixed rate mortgage. Fixed rate mortgages offer stability as the interest rate remains constant throughout the loan term. This consistency in payments makes it popular among homebuyers looking for predictability. A borrower with limited cash for a down payment would most likely benefit from which type of loan? Is it A, conventional loan, B, Federal Housing Administration, FHA loan, C, jumbo loan, or D, interest-only loan? The answer is B, Federal Housing Administration, FHA loan. FHA loans, secured by the Federal Housing Administration, are designed to aid borrowers with limited savings by offering reduced down payment requirements, making homeownership more achievable. Which type of loan is specifically designed for U.S. veterans and may offer no down payment? Is it A, conventional loan, B, U.S. Department of Veterans Affairs, VA loan, C, Federal Housing Administration, FHA loan, or D, jumbo loan? The answer is B, U.S. Department of Veterans Affairs, VA loan. VA loans are guaranteed by the U.S. Department of Veterans Affairs and are designed specifically for eligible veterans, offering benefits such as zero down payment and competitive interest rates. What is a common feature of FHA loans? Is it A, require high credit scores, B, offer adjustable interest rates, C, require a small down payment, or D, not insured by any agency? The answer is C, require a small down payment. FHA loans are insured by the Federal Housing Administration and often require a smaller down payment, making them accessible to first-time homebuyers or those with less than perfect credit. Loan qualifications. Which of the following factors is typically crucial when evaluating a borrower's ability to repay a mortgage loan in Hawaii? Is it A, credit score, B, zoning laws, C, Federal Housing Administration, FHA loan limits, or D, property appraisal? The answer is A, credit score. Loan qualifications in Hawaii emphasize the borrower's credit score to assess repayment capability. It reflects their history of handling debt, crucial for mortgage approval. What percentage of a borrower's gross income is typically the maximum allowed for housing expenses under standard mortgage underwriting guidelines? Is it A, 28%, B, 36%, C, 31%, or D, 43%? The answer is A, 28%. Underwriting guidelines generally prefer housing expenses, including mortgage payments, taxes, and insurance, not to exceed 28% of the borrower's gross monthly income. What is the primary role of a debt-to-income ratio in loan qualification for real estate in Hawaii? Is it A, to calculate the total loan amount needed, B, to assess the borrower's borrowing capacity, C, to prioritize the loan application process, or D, to verify the property value? The answer is B, to assess the borrower's borrowing capacity. Debt-to-income ratio is key in determining a borrower's capacity for additional debt. This ratio ensures that the borrower can comfortably manage monthly obligations relative to income. In Hawaii, a borrower must typically meet which criterion for conventional mortgage loan eligibility? Is it A, higher than 20% down payment, B, stable employment history, C, insurance through FHA, or D, joint ownership with another party? The answer is B, stable employment history. Stable employment history is a key factor for conventional loans, reflecting reliable income necessary for consistent loan repayments, which lenders in Hawaii require. Which document is essential to ascertain before finalizing a mortgage loan to ensure the property value is accurate in Hawaii? Is it A, credit report, B, loan estimate, C, home appraisal, or D, title search? The answer is C, home appraisal. A home appraisal is vital to confirm the property's current market value, ensuring the loan amount aligns with what the home is actually worth. This protects both lender and borrower. What is typically required from a borrower in Hawaii to qualify for a FHA loan? Is it A, a high credit score, B, a minimum down payment of 3.5%, C, a large savings account, or D, an expensive property in an urban area? The answer is B, a minimum down payment of 3.5%. FHA loans in Hawaii require a minimum down payment of 3.5%, allowing more accessible home financing. HUD administers these loans, and they provide options for borrowers with modest credit. Which factor might disqualify a borrower from obtaining a VA loan in Hawaii? Is it A, not being a veteran or service member, B, having a high credit score, C, owning a primary residence, or D, renting a property? The answer is A, not being a veteran or service member. VA loans are exclusively for veterans, service members, and eligible spouses. They offer favorable loan terms, but ineligibility in these categories disqualifies applicants. The loan application process. What is the primary purpose of a loan application in Hawaii real estate transactions? Is it A, to determine borrower eligibility for a loan, B, to establish the loan interest rate, C, to finalize the property purchase offer, or D, to calculate property taxes? The answer is A, to determine borrower eligibility for a loan. The loan application process is crucial for evaluating the borrower's financial credentials to determine their qualification for a real estate loan based on regulations by the Hawaii Division of Financial Institutions. Which document is essential as part of the loan application to verify a borrower's income in Hawaii? Is it A, credit report, B, property appraisal, C, pay stubs, or D, property deed? The answer is C, pay stubs. Pay stubs are typically required by lenders to verify and validate a borrower's reported income as part of the loan application process in Hawaii. What role does the Fair Credit Reporting Act play in the loan application process? Is it A, it dictates mortgage interest rates, B, it protects borrowers from discrimination in loan approvals, C, it regulates the accuracy and privacy of credit information, Or D, it sets minimum down payment requirements? The answer is C. It regulates the accuracy and privacy of credit information. The Fair Credit Reporting Act regulates how credit information is collected, accessed, and used during the loan application process, ensuring accuracy and privacy for the borrower. Which factor is most crucial for lenders when assessing a borrower's loan application in Hawaii? Is it A, marital status, B, borrower's credit score, C, number of dependents, or D, type of employment? The answer is B, borrower's credit score. The borrower's credit score is crucial because it reflects their creditworthiness and ability to repay the loan, as required by lenders during the loan application process. What information is typically required on a loan application regarding the property in Hawaii? Is it A, the property's historical appreciation rate, B, property address and value, C, names of previous owners, or D, estimated insurance costs? The answer is B, property address and value. The property's address and value are essential parts of a loan application since they establish the collateral's identity and worth for the lending process regulated in Hawaii. What is the significance of a debt-to-income ratio in a mortgage application? Is it A, it indicates a borrower's credit score, B, it helps lenders determine a borrower's ability to repay the loan, C, it determines the interest rate of the loan, or D, it is used to calculate property taxes? The answer is B, it helps lenders determine a borrower's ability to repay the loan. A borrower's debt-to-income ratio is pivotal in mortgage applications, guiding lenders in assessing whether the borrower can handle additional debt. Typically, a lower DTI suggests better financial health and repayment ability. Which entity typically provides the property appraisal during the loan application process? Is it A, the real estate agent, B, the lender, C, an independent certified appraiser, or D, the buyer? The answer is C, an independent certified appraiser. An independent certified appraiser evaluates the property's market value to ensure its alignment with the asking price, protecting lenders and borrowers by ensuring that the property's worth justifies the loan amount. Underwriting for Hawaii real estate. What is the primary role of an underwriter in Hawaii real estate finance? Is it A, to determine the market value of a property, B, to assess the risk of a borrower to approve or decline a mortgage, C, to negotiate interest rates with borrowers, or D, to conduct title searches and ensure clear property title? The answer is B, to assess the risk of a borrower to approve or decline a mortgage. The underwriter evaluates the borrower's financial stability and property's risk to decide on mortgage approval. In Hawaii, this process ensures loans are aligned with local regulatory standards. In Hawaii real estate underwriting, which factor is least likely to be considered by the underwriter? Is it A, borrower's employment history, B, borrower's credit history, C, market trends impacting future property value, or D, property's current value? The answer is C, market trends impacting future property value. Underwriters concentrate on current risks, including borrower reliability and present property value, rather than speculative market trends, which are less predictable. Which regulatory guideline must Hawaii underwriters comply with when assessing loan applications? Is it A, Truth in Lending Act, B, Hawaii Landlord-Tenant Code, C, RESPA, Real Estate Settlement Procedures Act, or D, Hawaii Community Association Regulations? The answer is A, Truth in Lending Act. Though underwriters must also consider RESPA, the Truth in Lending Act mandates disclosure of credit terms directly influencing underwriting assessments. What aspect of a property is most critical for a Hawaii underwriter when evaluating a real estate loan? Is it A, the architectural style of the property? B, the property's appraised value? C, the property's proximity to schools? Or D, the previous owner's property tax history? The answer is B, the property's appraised value. Underwriters base loan decisions on the appraised value to assess the risk and adequacy of the property as collateral, adhering to Hawaii's real estate guidelines. Which is an underwriter in Hawaii least likely to verify during the underwriting process? Is it A, borrower's tax returns? B, borrower's bank account balances? C, property's blueprints and architectural plans? Or D, proof of regular utility bill payment by the borrower? The answer is C, property's blueprints and architectural plans. Property blueprints typically concern insurance or construction loans more than standard underwriting assessments, which focus on income, credit, and existing property value. Which factor is crucial for underwriters in Hawaii when assessing a borrower's ability to repay a real estate loan? Is it A, borrower's credit score? B, borrower's marital status? C, type of real estate agent used? Or D, location of the closing attorney? The answer is A, borrower's credit score. Underwriters evaluate a borrower's credit score to determine risk and repayment ability. State regulations might define criteria, but this remains a universal factor of importance. Loan closing. What is the purpose of a closing disclosure in a loan closing in Hawaii? Is it A, to provide a summary of credit history to the lender? B, to ensure the buyer's obligation matches the mortgage agreement? C, to list the housing market prices in Hawaii? Or D, to finalize the legal descriptions of the property? The answer is B, to ensure the buyer's obligation matches the mortgage agreement. The closing disclosure outlines the loan terms, projected monthly payments, fees, and costs. It ensures the buyer understands and consents to the obligations of the mortgage. In Hawaii, who is typically responsible for preparing the closing documents during a real estate transaction? Is it A, the buyer's real estate agent? B, the closing attorney or escrow agent? C, the property seller? Or D, the mortgage lender? The answer is B, the closing attorney or escrow agent. In Hawaii, closing documents are usually prepared by a closing attorney or escrow agent, ensuring all legal requirements and conditions are met before finalizing the transaction. What is the primary benefit of escrow in the loan closing process in Hawaii? Is it A, it eliminates all closing costs for the buyer? B, it holds funds securely until all conditions of the sale are met? C, it increases the property value? Or D, it reduces the interest rate on the mortgage? The answer is B, it holds funds securely until all conditions of the sale are met. The main advantage of escrow is to securely hold and manage funds during a transaction until all sale conditions are satisfied, ensuring all parties uphold their agreements. During a loan closing in Hawaii, what is the importance of the title search? Is it A, it provides an estimate of property taxes? B, it checks for existing liens and encumbrances on the property? C, it offers a market analysis of competing properties? Or D, it ensures the buyer qualifies for the mortgage? The answer is B, it checks for existing liens and encumbrances on the property. The title search is crucial in a loan closing process as it confirms the property's legal ownership and checks for existing liens or encumbrances, allowing the buyer to acquire clear title. What role does the loan estimate play in the loan closing process in Hawaii? Is it A, it guarantees loan approval for the borrower? B, it outlines the estimated costs and terms of the mortgage loan? C, it records the final property purchase price? Or D, it determines if the property is insurable? The answer is B, It outlines the estimated costs and terms of the mortgage loan. A loan estimate provides borrowers with an overview of the estimated costs, terms, and fees involved in a mortgage loan, aiding borrowers in making informed financial decisions before finalization. What is the purpose of a good faith estimate in a Hawaii loan closing? Is it A, to predict annual property tax expenses, B, to provide a detailed list of expected costs, C, to determine the borrower's creditworthiness, or D, to finalize the terms of the loan agreement? The answer is B, to provide a detailed list of expected costs. The good faith estimate provides borrowers with an itemized list of estimated costs to finalize a mortgage. This helps ensure transparency in lending practices and was replaced by the loan estimate under TRID in 2015. Hawaii Mortgage Disclosure Requirements. What is the primary purpose of the Hawaii Mortgage Disclosure Requirements under state law? Is it A, to prevent real estate agents from overcharging clients, B, to ensure borrowers understand the terms and costs associated with their mortgage, C, to align state regulations with federal mortgage guidelines, or D, to facilitate faster mortgage approval processes? The answer is B, to ensure borrowers understand the terms and costs associated with their mortgage. Hawaii Mortgage Disclosure Requirements aim to provide clear, concise information to borrowers about their mortgage commitments, ensuring transparency and informed decision-making. Which document must be provided to borrowers under Hawaii's mortgage disclosure regulations? Is it A, loan estimate, B, good faith estimate, C, settlement statement, or D, lender's commitment letter? The answer is A, loan estimate. Under Hawaii law, lenders must provide the loan estimate, a standardized form detailing loan terms and costs, within 3 business days of receiving a loan application. When must a lender provide the closing disclosure to the borrower in Hawaii? Is it A, at the time of loan application, B, 3 business days before closing, C, 1 week before the first mortgage payment, or D, upon mortgage application approval? The answer is B, 3 business days before closing. The closing disclosure must be provided at least 3 business days before closing, detailing final loan terms and costs to allow borrowers time to review and understand their financial obligations fully. Which entity in Hawaii oversees the enforcement of mortgage disclosure compliance? Is it A, Hawaii Department of Commerce and Consumer Affairs, B, Hawaii Real Estate Commission, C, Federal Reserve Bank of Hawaii, or D, Hawaii Tax Department? The answer is A, Hawaii Department of Commerce and Consumer Affairs. The Hawaii Department of Commerce and Consumer Affairs enforces mortgage disclosure laws, ensuring that lenders comply with state regulations to protect consumer interests. What penalty might a lender face for violating Hawaii's mortgage disclosure requirements? Is it A, license suspension or revocation, B, increased interest rates on future loans, C, a temporary ban on advertising, or D, reassignment of foreclosure rights? The answer is A, license suspension or revocation. Lenders breaching Hawaii's mortgage disclosure requirements may face severe penalties, such as license suspension or revocation, ensuring compliance and protecting consumer interests. What is required to be disclosed to a borrower when a mortgage loan application is denied in Hawaii? Is it A, a detailed explanation of the denial, B, an adverse action notice, C, the loan officer's personal contact details, or D, a copy of the borrower's credit report? The answer is B, an adverse action notice. Hawaii law, in compliance with federal requirements, mandates that lenders issue an adverse action notice to borrowers if a mortgage application is denied, ensuring transparency and borrower rights protection.
Thanks for joining us today. If you found this video helpful, subscribe to our channel for more practice exams, tips, and tricks. And don't forget to visit birdsey.ai for complimentary study sessions with Birdsey, your AI-powered study partner.